Cannabis stocks are rocketing higher in reaction to news that the DEA may reclassify the drug as less risky. So, cannabis stocks are obviously jumping a massive amount in today's trading session on the backs of this news. So the U.S. Department of Health and Humane Services has sent a letter to the U.S. Drug Enforcement Administration recommending that cannabis be reclassified from a Schedule 1 to a Schedule 3 drug. Schedule 1 drugs are considered to have high potential for abuse with no accepted medical use. The category includes drugs such as heroin and LSD. Schedule 3 drugs are defined as having low risk for psychological or physical dependence. Such Schedule 3 drugs include Tylenol, codeine, ketamine, and anabolic steroids. So this is obviously a great piece of news for the cannabis industry. Obviously, it's not, it's not the Banking Act, right? It's not going to allow cannabis stocks to, bank in the U.S., unfortunately, but it's still a good step in the right direction and really does, work on, not really on kind of undemonizing this sector. I don't know if that's a word, but I'm using it. Really because the cannabis sector has been demonized for a long time, and these stocks have kind of felt the effect of that. And with this, with marijuana being scheduled as a Schedule 3 drug, being classified as a Schedule 3 drug, well, that's only going to help the cannabis sector. So this is definitely a big deal for the stock. Obviously, this hasn't happened yet, right? This is just a request from the Department of Health and Humane Services, but, this is the first step of this, kind of reclassification of marijuana as, a lesser harsh drug into a Schedule 3 drug. So with that being said, I'll go over the company's financials, and at the end of the video, I'm going to give a price prediction based on technical analysis. So make sure you stay till the end. But with that being said, let's dive right in. So currently, the stock has a 0.48 price to book ratio. What does this tell me? This tells me that we are trading at a 0.48 price to book, means that we have the market cap is about half the value of the assets on this company's balance sheet, or its book value. So that's actually a really good number. It's well below the sector median of 2.1. So I would say this 0.48 number is a really, really attractive price to book ratio for any stock. It's honestly like kind of crazy. It's definitely screaming that this stock is trading at a discount. Of course, we don't have earnings right now. The company isn't profitable. But let's take a look at some of the growth metrics for the stock. So over the past 12 months, growth was just slightly down, and this is actually turning around over the next 12 months. So over the next 12 months, revenue is projected to be at 7%, which is right in line with the sector and is actually below Tilray's 5-year average of 18%. But as the business matures, you're not going to see a gangbusters growth number every single quarter, every single year. So this 7% number is a pretty solid number. And then with that being said, let's look at the profitability metrics. So we can see here that the gross profit margin is 24%. For those that don't know, that basically tells you what a company makes for what it sells. So 24% gross profit margin is pretty decent for the industry. And for the sector, obviously, though, it's lower, but we have a tough comp for the sector. We're comparing ourselves to the healthcare sector. I'm going to compare all these numbers to the marijuana industry. So first off, let's start off with this balance sheet here. So we have about $500 million in cash and then roughly $600 million in debt. So net, we have $141 million in net debt. And then we have True Leaf Cannabis at $152 million in cash and about $1 billion in debt. So they have about $816 million more debt than cash. So as you can see, debt relative to cash, Tilray is actually in the best spot amongst all the peers. And just to kind of give you a gauge on what I'm really comparing this to, I'm comparing Tilray to True Leaf, Canopy Growth, Green Thumb, Hexo, Curaleaf, and Cresco Labs. So a bunch of other, marijuana stocks. But with that being said, Tilray has the best balance sheet amongst all peers when you look at the cash holdings relative to debt. But with that being said, let's take a look at the company's profitability metrics and see what we can take away from that. So the company has a gross profit margin of 24%, as I had said, and this actually ranks out kind of poor amongst the peers. So we have True Leaf Cannabis at 51%. We have Canopy Growth at minus 1.9%. Obviously, we're beating them. Green Thumb at 49%, Curaleaf 39%, and then Cresco Labs 45%. So overall, these profitability metrics aren't in True Leaf's favor. Unfortunately, the company ranks out pretty poor on a profitability basis. But let's take a look at growth. So let's take a look at the 5-year compounded annual growth rate. So we have a 5-year compounded annual growth rate of 87%, which is actually above True Leaf Cannabis, above Canopy Growth, and above not above Green Thumb. Actually, Green Thumb outranks Tilray as they sit at 96%. And then Curaleaf is at 108%, and then Cresco Labs is at 111%. And then let's take a look at the valuation. So pretty much all of these companies don't make money. And we can see here that the closest to making money is Green Thumb, which is projected to have a 27 times PE next year. And then 3 years down the line, we're seeing that Tilray is projected to have a minus 80 times PE, so still not profitable. The only company that is projecting profitability in the near future is Green Thumb, and then Curaleaf is projecting profitability 3 years from now. But let's take a look at some of the numbers that we can kind of compare to that are kind of comparable for this stock. So Tilray has a 0.48 times price to book ratio, as I had said, and then True Leaf has a 0.45, Canopy Growth is 0.4, Green Thumb 0.97, Curaleaf 1.6, and then Cresco Labs 0.54. So this tells me that we're basically in the middle of the pack in terms of price to book ratio. Although I still think, having a price to book ratio under 1 definitely signals that this sector is not really being valued, very highly at this point in time. And then we can see, based on trading, actually the stock that's outperformed the sector over the past 12 months is actually Tilray. Tilray is the top performing stock over the past 12 months, over the past year for the entire the entire cannabis sector, which is covering crypto. So, very interesting to see that this stock is outperforming the general peers. Typically, when a stock is outperforming, that outperformance trend tends to continue. So, hoping that continues here for for Tilray. Sorry about that. So, with that being said, though, let's take a look at some of the recent institutional buys for this company. So we actually saw Vanguard increase their holdings by 10% over the quarter. We saw Citadel increase their holdings by 17%. We also saw BlackRock increase their holdings by 16%. Morgan Stanley did sell, and then we saw State Street increase their holdings by 5%. So State Street, Vanguard, BlackRock, the 3 largest asset managers in the entire world, are buying more Tilray. That's obviously a good thing for the company. And this is very typical, though, amongst stocks that have kind of lost some market value. This is a typical rebalance. So it doesn't shock me, but it is good to see that these stocks are still, that Tilray specifically is still being bought by the largest asset managers in the entire world. That's definitely not a bad thing, right? So the top 3 asset managers in the world are buying Tilray. And then with that being said, let's take a look at some of the Wall Street ratings for this stock. So right now we have 3 bullish ratings from 3 different investment firms, and then 2 bearish ratings, and then 6 basically neutral. So the average price target right now is about $5.87, which is well above the stock's current price right now. That's the average price target. The highest price target is $23. So it probably hasn't been updated in a bit, but still, this is a pretty high number, and they haven't upgraded it down. They haven't updated this number down yet. And then we also see the lowest price target is $2. put in by Barclays. So no real recent changes in ratings. The last update was 411. So no real updates to kind of give back to you folks in terms of recent price upgrades or downgrades. But with that being said, let's jump into the chart. Let's give a price prediction on this stock. As this kind of arrow here signals, I do think the stock is likely to move higher, and I'll tell you why. So off of today's news, we've moved back over a major resistance level at about $2.60. This is where shares had bottomed out in January. It's also where shares had topped out in April and March. So past resistance becomes new support. So if we're able to close a daily candle above this level, I do believe this 260 level will act as support for the stock and likely catapult shares higher up to resistance at about $3.60. That isn't a random level I'm picking. This is where shares had topped out, where shares had pulled back earlier this year on February 2nd. So I do think we could likely see a quick move up to that level over the coming weeks for this stock. Currently, we're trading above all daily moving averages, which is a good sign in terms of momentum as well. And then let's take a look at which months are best for the stock, which months are worse in terms of just pure price performance. So this screen shows me the best and the worst months as a percentage. So in August, shares typically do decline 6%. In September, shares do typically decline 14%. In October is actually the second best month for the stock, as shares typically rise around 15%. So we only have 4 years of data here, so not the end-all be-all. And like I said, I do think shares are likely to continue higher. And also one point I don't want to forget about here is the stock had really topped out on its volume, on the 9th of August. Ever since then, prices have been dropping and volumes have been dropping as well. Anytime price drops and volumes slump at the same time, it basically just says that selling pressure is weakening. And, what happened today, we had obviously a move higher and a jump in volume. Well, this tells me that we could be seeing a trend reversal here. That's just, basic volume TA. So that is obviously a good thing for the stock. We could be seeing a price. Well, volume is suggesting that we're about to see a trend reversal in terms of price movement, which would obviously be a good thing for Tilray. So with all that being said, I do think this stock is an interesting stock to kind of be allocated to, especially if you're wanting to allocate some capital to the marijuana sector. I do think this is one of the best stocks to be allocated to. So with that being said, I like the stock long term. I think it's a good stock within the marijuana sector. The chart looks like a buy. So you add it all up, this stock is very intriguing. With that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.